All right, so yeah, like I said, this is another mindset call, Sunday mindset call with me and Pitman. And today's topic of the conversation is basically, we do these mindset calls twice a week. Our sisters do a good job on Sunday on Wednesdays. So that's why on Sundays usually we want to gear it towards like trading and whatnot. To have the good, a good mindset basically before the week starts. So obviously today we decided that we're going to be talking about trading plans, the importance of having a trading plan, and not just having it, but to follow it, and not give up on your trading plan. There's a reason why you would have a trading plan. Obviously, every successful trader has a trading plan, and not only have it, but follow it to a T. No matter what, even if they have a bad streak, bad few days, bad week, or whatever, there's a reason why you have a trading plan. So you have to follow through. If you keep quitting, you're never going to achieve your goal because that's just not the way work. The life works. So first thing I wanted to say, just basically I want to give a quick explanation on what a trading plan is. So our trading plan is made up of several different plans, which you are going to learn about here in a little bit. So your trading plan should have a clear rule process which you should follow every single day. By having a trading plan, you have a guide of what you should be doing rather than just guessing or making it up as you go along. All right, and about 90% of traders, about 90% of traders usually say they have a plan but don't have it written down. That's not a trading plan, especially for a beginner. You can't just say, "Oh, I got a plan. This is what I'm going to do when I'm going to trade, and this and this and that." You have to write it down. You have to put it in a piece of paper so you can look at it every single day when you start your trading day. Right. So that's how you can follow it to a T. Because I don't know about y'all, but I got bad memory, so I can't really say that I have my trading plan in my head because it's going to change every single day depending on how I feel that day. Right. So have a trading plan. Write it down on a piece of paper, on your phone, whatever, somewhere that you can be able to access it when you start your trading day. All right. So all right. So now we're going to talk about the points that we need to have on our trading plans. There's a few things that we wanted to cover.
Yeah.
What's up?
Oh, my fault. I thought I was muted, bro.
Nah, you ain't muted, but it's all good though. I was like, hold on, did I say the wrong thing?
Nah. I'm thinking it.
All right, so basically, there's a few things that we wanted to cover as far as like what you want to have on your trading plan. So we're gonna go by, go one by one. I'm gonna, put my 2 cents in and let my brother Pitman, throw his 2 cents in. All right. So so basically, the first step that we wanted to talk about is, have a step by step of what you do on your chart. All right. So what that basically means is that when you start your chart, like when you start your day, and you pull up your chart, you need to figure out how you mark up your chart, right? If you're the type of person that that puts support and resistance and trend lines or whatnot, then do that, right? Don't do one thing one day and then the next day go ahead and do something different, right? So if your trading style is looking for order blocks or it doesn't matter. I'm just giving an example, so it just doesn't matter. Just have one um, set of strategies that you actually do when you look at when you mark up your charts. Basically, what I'm saying is don't have different ways that you can mark up your chart. Don't do one thing one day and then do another different thing the next day. Make sure that you're consistent with it, and do the same thing every single day, no matter what. All right. You want to add to that, Pitman?
Yeah. Um, Pretty much what he said. Don't switch up your strategy. Of this day I'm gonna do this. This day I'm gonna do this. This day find you something that works for you, and be consistent at that. Master that strategy. Get comfortable with that strategy. Um, if even if it's just looking at a certain pattern, be comfortable looking at them patterns and get comfortable knowing where to make your entry, where to make your exit. Not too long ago, we was talking about head and shoulder patterns, and I was saying how I see head and shoulders every day now. Like it was real hard to see them at first, and now they pop out all over the place. And I was watching this head and shoulders just now on XRP, and I didn't. I closed my trade at 70 cents, and then it dropped. Anyways,
Sound like you're dwelling, man.
anyways, leave that alone. But yeah, just find you got to write out a trading plan. Find out how you want to trade, what your rules are, and stick to it. Just be consistent. Don't switch up because somebody else is doing something and it's working for them. Because if you don't have an understanding of it, you're just gonna be throwing money at the market.
And they'll take it too. They ain't gonna throw it back at you.
Right.
um, but yeah, and then another thing too about that is, about the chart up part too. Like, you gotta understand, you gotta know what kind of trader you are. So
Mm-hmm.
obviously, if you're a scalper, you might mark up your charts a little bit differently if you're an intraday trader or if you're a swing trader. Obviously, the time frames are different. You got to figure out which one works for your style and stick to it. So, for instance, if you like a scalper, you don't have no business marking up a monthly chart or there's no reason for you to do that. Like it just don't make no sense, right? Because you're only going for a few amount of pips. Now, if you're a swing trader, it would make sense for you to mark up a daily, monthly, maybe 4 hours or whatever. So just understand the style of trading that you choose to do, and do exactly what you're supposed to be doing with that. Don't be doing the wrong things with the like I just said. Don't be doing things that you're not supposed to be doing with your markups. All right. So the next step, the next thing that we wanted to talk about as far as your trading plan goes, um, make sure you write down the pairs that you are going to trade.
Mm-hmm.
Obviously, we always tell people, especially if you're a beginner, you got to choose that one pair that you actually know inside out. You just master it. Just that's the one pair that you look at every single day, and know exactly how it moves before it does that. That, and then you can have a couple more other pairs, just to kind of align with it. Just in case you don't get a setup that you want on your main pair, you can always look at the secondary ones, but not to have more than three pairs or something like that. Me personally, obviously I didn't just start trading, so I'm pretty familiar with most pairs. I know a lot of y'all know that I love my GU, but that's not the only one that I'm gonna be trading. Obviously, I have multiple pairs that I can go to trade, but I'm not saying that that's what you're supposed to be doing when you're a beginner. And that's another thing too. Like your trading plan from day one doesn't have to be the same trading plan in day 100, because you're gonna evolve. You're gonna get
Mm-hmm.
better. You're
Mm-hmm.
gonna learn more things. You're gonna learn more tricks. So you want to add that to your trading plan also. But as far as like a beginner, you have to keep it as simple as you can. And the simplest way that you could do that, as far as the pairs go, is to choose one or two, three, one to three pairs that you follow on a regular, that you mark up on a regular, that you trade on a regular, right? So you don't want to, you don't want to, just wake up one day and you decide to trade USD Mex and you've never even looked at it. You know, it just doesn't make sense. All right.
Yep. Yep.
You want to add on to that, or you good?
It's especially important in the beginning
Yeah.
to learn a pair and learn the way it moves. And when you're looking at the charts, not to be looking for a trade, but looking for understanding. You need to understand what times your pair moves, what what retracement levels it likes, when it's the most volatile, what it correlates with. You want to learn everything about that pair. And me personally, when I started off, I didn't know that. And I was looking at everything. I was taking every trade. If I'm looking at the chart, I was looking to make a trade. And I lost a lot of money. But just find you a pair that fits your time frame that you have to trade, that fits um as far as what type of trader you are, you want to look at, if you're a scalper, you want to make sure you're focusing on those time frames, those smaller time frames. If you're an intraday trader, you want to make sure you're focusing on a little bit bigger time frames. Swing trader, bigger time frames. But make sure that you're focusing on that pair. Don't don't be trying to trade GU just because Mo trade in GU, and I'm trying to trade SPX just because I'm trading SPX, or just because it's trying to trade in gold. You ain't got to get your hands dirty in gold. Find you a pair, whether it be one of those three or any other pair. Find you a pair, stick to it, and learn it. And then after you got comfortable with that one, then you can expand and start looking at other pairs. But when you find a pair that you really rock with and you started learning how that pair moves, you might not even want to switch up. You might just say, all right, I'm gonna put a ring on it. This is Bay.
That's a commitment right there.
Mm-hmm.
But yeah, so yeah, that's keep it simple. Choose your few pairs that you're gonna follow, and stick to them. Even if you have a bad streak, let's just say you choose GU, right, and then you lose 2, 3 in a row. I don't mean that you got to go ahead and switch up to another one. Just look
Right.
into it, do your homework, and find out why you keep losing.
Mm-hmm.
Because sometimes it could be something so simple as, like, maybe you need to tweak something here or there. So don't give up on a pair just because you're on a losing streak. That's part of the game. You do this long enough, you're gonna have losing streaks. I can tell you that from experience. You know what I mean? So just because you lost a few trades, don't mean that you got to switch it up. All right.
And it
Um.
don't mean you gotta quit.
Yeah.
You're
Not
gonna lose.
quit
You're
ain't no
gonna.
option, man. Yeah, quitting is not an option. You know. Put an X on it.
Mm-hmm.
All right. So the next thing that you would want to put on your trading plan is to have a set rule on your entries, right? So when it comes to entries, you need to know specifically what allows you to say yes to this trade or to say no. And if it doesn't align, then don't take the trades. Like, for instance, if you have a set of confluences that you got to look at before you take a trade, if you like let's say you have 4 confluences, you only have 3. Obviously, you don't have everything you need. Even if it looks enticing, don't take the trade, because that's not your rule. Your rule is, if I have 4 confirmations, I'm going to take this trade. If I don't have the 4 confirmations, even if I have 3, 3.5, it doesn't matter. It's not 4. Don't take the trade, right? Because if you take the trade and you lose, that's on you, because you didn't follow your plan, right? And that's something that you have to write on your trading plan. You got to say, these are my entry rules. I have to have, like, just giving you an example. Price has to be below the 50 MA for me to take a sell. You know, or whatever. It has to have, price action has to match, right? Or whatever. That's something that you have to come up on your own to see what's important to you before you take a trade, right? Um, and if you don't have an entry rule, you'll have distractions, because then you're gonna start, you'll have distractions and you're gonna start losing and you're gonna start blaming things that you don't have no business blaming on, because you didn't do your job, you didn't do what you said you were gonna do, right? And that also goes with not taking the trades. You gotta have enough to where it can tell you, okay, here, it's safe for you to take it or not. And if it doesn't match up with what you put on your rules, then don't take it. That's the simplest way. All right. And then the next one, obviously, you have to have an exit strategy. I mean, an exit rule, or an exit target, right? So, so basically, an exit target rule is an area where you're looking at to take profit from the market, right? Um, you can say, okay, I'm only going for 20 pips, right? That's your exit. That's your exit rule. If you hit 20 pips, it doesn't matter if it continues to go. Don't move your TP and just be greedy to trying to catch more pips or whatever, just because you see that it's going your way, right? Because that's how you lose money, right? I've done that plenty of times where it would hit where it'd be close to my TP and I would just move it, and the next thing I know, it reverses on me and I end up losing it, right? That's stupid. Don't do that, right? So same as your entry target, your entry rules, you have to have an exit rule, and you have to follow it. You know, you have to have your set of confluences, and that's what you would write down on your trading plan, right next to target rules or exit rules. You have to put that down. So even if you let's say you forgot what you put on there or whatever, you don't remember what you put on there, you could just pull up your trading plan and look at it, be like, okay, this is when I get out of get out of the trade. If I'm losing, if I get this, because again, you don't have to wait until it hits your top loss. Sometimes you might get out because you know that it's not going your way. You can confirm that this is not just a retracement, that you know that this is a reversal. So it's going to hit your stop loss. So why not, just take it out before it hits your stop loss, right? Same thing when you're in profit. If you see it reversing, you know that it's not going to come back up. Get out of the trade. You know, so that's just another thing that like I said, that you want to put on your trading plan. All right. And just a few examples on on how to come up with rules as far as like your exit targets or exit rules. Some people like to use, I know Pitman, we were talking about the other day, the Fibonacci level.
Ribs.
Right? So fibs is a good tool to help you know when to exit a trade or not, right? Again, support and resistance. If you see prices struggling at a key level and it's just playing around it, you know, that might be an exit for you. Like, okay, I don't know what's gonna do here because this is a support level or this is a resistance level, this is a key level. Instead of me just sitting around and waiting for it to decide what it's gonna do, let me just get out, right? And then once you figure out what it's doing, then you can get back in or whatever. Figure out what you're gonna do, right? But this is all something that you can put on your trading plan. Just say, okay, this is what I'm gonna be looking for as far as me getting out of the trade. All right. You want to add anything to that, or are you good?
I was about to say, take your trading plan seriously. Like, you're not just saying this to be here talking. Like, it really is a difference maker as far as your success is gonna be. Because if you don't have rules on why you take a trade, then you just out here just willy nilly. Oh, price action. This candle look like it's going bullish. I'm gonna go ahead and buy. But you ain't got no confirmations. You ain't got confluences. So as soon it start to reverse a little bit. You taking a little bit of drawdown. You close the trade. Then now it's bullish again. Oh yeah, I'm gonna go ahead and buy it now. I'm gonna buy it now. And then now you in some more drawdown. You close it again. When really it was bullish, but you ain't have no confirmations. You didn't have your confluences and your rules, so you ain't know, huh? I'll be right back, y'all. I'm sorry. I'm sorry.
Very good. But yeah, so basically it was just basically saying what I was saying. So I see a question in the chat here. It says, how about moving TP1 to TP2 and changing stop loss to TP1? I mean, that's a rule, right? That's a rule. Um, not saying that everyone should do it, but if that's something that you're comfortable with, putting on your trading plan, like let's say if you have TP1 and TP2, right? And TP1 is already hit. You can move your stop loss into profit. That way, even if it does reverse, it's not going to be a losing trade, right? And then you can move your TP to TP2, right? So that's something that you can. That's another example of an exit plan, right? Um, all right. So, and then the next point that we wanted to talk about is basically have your daily routine, right? Your daily routine, you have to put it on your trading plan because you can't just get up and just, get on the charts at any time and then just expect to be successful. You have to have a daily routine, right? You got to say, okay, every day I'm going to get up at 8 o'clock. I'm going to trade the New York session or whatever, and I'm going to be in front of my charts for 2 3 hours, and then that's it. I'm going to go ahead and do other things, right? Um, so that helps you become more disciplined. Obviously, being more disciplined is always a good thing, right? So you have to have a plan. What time do I need to wake up, right? What time do I start my day? What time do I get out of the market? You know, what time do I need to check for the market? And again, that goes back to the pairs that you choose. If you choose GU or European pair that you want to be up the London and New York session or whatever, right? You got to find out what sessions you have to be up for, and then you have to have a daily routine and follow that daily routine, right? And it's not just a daily routine, but also a weekend routine. We know that the market is not open during the weekend, so you that doesn't mean that you're not going to do anything during the weekend. You can do like your back testing, your forecasting. You can still do your markups or whatnot. Everything that I'm saying here, you have to put it on your trading plan. You got to say what I'm going to do on a daily basis, what I'm going to do on the weekends when the market is closed. That's going to help you become more successful. It's going to help you be more disciplined. It's going to help you be, a profitable trader, basically, because you have a set of rules that you're going to follow. That's going to keep you grounded and is going to keep you on the right path.
It's harder said than done, but we here to practice.
On God, on God, man.
I got
um,
a trading plan, and I lose that discipline sometimes.
yeah,
The trade looks good. I got two confluences that it looked good to me. You know what I'm saying? Sometimes you go ahead and you forget your discipline. But
yeah, yeah. And same here too. Like, I mean, everything that we're talking about, neither one of us has mastered it. You know what I'm saying? We all still working in progress too, just like y'all, right? So everything that we're telling y'all is things that we need to work on also, right? So by no means that I'm saying I'm this, master trader or somebody that got it all, figured out. I don't. I'm far from it. You know what I'm saying? So every time we bring up a topic to talk about, that means that's something that we need to work on too, right? So again, like with the weekend routine thing, I have a weekend routine that I have on my trading plan. I have written on my trading plan basically what I should be doing on the weekends. Ask me if I did that this weekend. I did some of it, but I didn't do all of it. But we're all work in progress, right? And that's why we put this information out there for you guys to know exactly what you need to be doing to become successful, right? So have a daily routine, have a weekend routine, follow that, and you'll see the difference. All right. And then the next step is have a section for journaling, right? Every single trader must journal. Every single trader must journal. Like it doesn't matter. It doesn't matter if you don't feel like doing it. You got to do it because it makes a difference. Because the thing about journaling is, when you win, lose, or draw, you always want to go back and look at what happened. Why did I win this trade? Why did I lose this trade? What happened? That way you're not that way if you lost this trade, then you can see why you lost it. That way you're not in that position again. Because you could put a trade in and then you lose it and then you go ahead and move on to the next one. And you don't remember what happened with the last one. You might go ahead and do the same mistake again because you didn't go back and do your homework and figure out why you lost that trade, right? And how are you going to find out if you didn't journal it? If you take like 10, 20 trades a week, how are you going to go back and find the one in particular that you need to be looking for and make your adjustments that way, right? And also it helps you, it allows you to basically know how well you're performing. And also, another thing that's going to help you with is, am I trading the right, sessions, right? Because if you're not trading the right sessions, journaling them might be one thing that you might notice. Like, hey, every time I lose this pair, it's 5 p.m. But it's an EU, so maybe that's why because it doesn't move during Asian or whatever. Just an example, right? And
uh,
also, yeah.
go ahead.
No, I was just saying, and also it's gonna that way you can see your win loss ratio. That's gonna be easy way for you to calculate that. See how profitable you are, or how not profitable you are, and what you need to be working on. Go
I
ahead.
was just I was just gonna say write down what, like you said, write down why you lost. If you lost a trade, write down the reasons. And go back and look at it later. Like look at your past and learn from it. If if you lost because a price action candle did something, or you didn't recognize it, or you was in it when it was you was in a buy when price was below your EMAs, whatever the reason is, write it down so you don't make that mistake again. Because everything we telling you is to cut down the losses. The losses are gonna come, but if you can cut them down, and that's all you need. You can lose more trades than you win, as long as you got a good win risk to reward ratio. But the less trades you lose, of course, it's going to be the better. So that's all we're trying to do is tell you how to stop or minimize the losses. So just write down why you lost and write down why you won. So that
Yep.
if you see these scenarios again, you know how to react. And it'll get to the point where it's subconscious. You don't even realize that, oh, the reason I'm doing this or getting in this trade or getting out of this trade is because of something that has been happening before. It's just, it becomes muscle memory.
Yep. Yep. And the last but not least, the most important one in my opinion, risk management. Risk management. Make sure you write down your risk management. If let's say you only risk in 2-3% of your account, make sure you write that down. And make sure that you follow that. Don't just put it down and then go ahead and risk 20% or 40% of your account because Damo throws through that fire signal. You want to catch all them pips. Have a number that you're comfortable with. Everybody's risk tolerance is different, so I'm not going to sit here and tell you, oh, you should only do 3%, you should only do 5%. Do what's comfortable to you. You need to figure out what's comfortable to you, and you need to put that on your trading plan and follow that. If you put down that you're only comfortable with 5%, there's no reason for you to be risking more than that. you know Again, I'm not going to tell you anything about risk management that y'all didn't hear before, but it is very important. If you don't practice good risk management and don't follow it, follow your plan to a T, you're gonna blow accounts out. And that's just not cool. You do that enough, you're not gonna be able to trade anymore, right? So make sure you write down your risk management, like what percentage of your account that you're willing to risk it, on each trade or each day, depending on just whatever you're comfortable with, right? And if you say that you're only risking 5% of your account a day, that doesn't mean that you got to risk 5% every trade. That means a day. That's another thing that I have to tell people. Just because you put down 5%, that doesn't mean that every single trade you're going to be risking 5%. Because if you add them all up, that's if you take 10 trades, that's 50% of your account that you just risked. When you say 5% a day, make sure that you divide them up to however many trades that you're going to be taking that day. And also another thing about risk management is too, with the trading plan, make sure you put down how many trades you're going to be taking per day. Doesn't matter if you win them all, lose them all, doesn't matter, right? If you say I'm only taking 5 trades a day and you're only willing to risk 5% of your account a day, that means that every trade should only be taken, like every trade you should only risk 1%. That adds up to 5%, right? Again, just because you risk 5% a day doesn't mean that that's how much risk you got to do on each trade. All right. Um, yeah, I think that's what I got with with the risk management. You got anything?
You pretty much hit it. Like risk management is one of the things that we all know what we doing. We know what we need to be doing. It's a matter of beating that greed. Um,
Agreed, man.
cause
Agreed.
you gotta the 2%. Like if you risking 5% a day, then if you taking a 3% risk on a trade, you can only take one good trade before you know what I'm saying. You gotta lower your lot size or something to so that you don't overdo that 5%. But I don't know. It's just make sure that you get the best risk to reward that you can, and manage that risk. I know I go a lot heavier. I'll be a lot more risky when my lot sizes are smaller. If I see a real good setup, I'll be a lot more risky. But
Yeah,
I understand what's coming with that. Before I hit that button to either buy or sell, I know how much I'm gonna lose or win.
exactly.
You know what I'm saying? Well, really, I know how much I'm gonna lose. I know if I lose that, all right, I'm gonna lose X amount of money. But it's as long as you're okay with it,
Yeah,
do what you want to do, man. I
yeah.
can't. I'm too risky to tell somebody about risk management.
And you telling me? I know a lot of y'all over here probably shaking their heads like, yeah, right. I know you ain't talking about risk management, bruh. But I got to, because I got to work on it too, as y'all
Yeah,
know, you know. So and again, like like you just said, you might be okay with losing $200, but the next person might not be okay with that. So again, you got to find what you're okay with. You got to find what what you're going to tolerate, and then go with that. Just because Pitman wants to risk 5% don't mean that you got to risk 5%. It just don't work out like that. And also, your account size has a lot to do with it too.
yeah,
Obviously, you know.
yeah.
So, and you cannot grow grow your account to where you want it to be by over risk, by over leveraging or by risking more than what you're supposed to. The
That's
key
the
is to compound, man. You just got to
that's
compound your account. Yeah,
I've blown a lot of accounts trying to just hit big when I first started. Like
yeah,
you got blown a lot of because you can win them first one or two trades and you
yeah.
get comfortable with that over leveraging
Hmm.
and all it takes is one or two trades when you over leveraging the way I was and your account's gone.
Hmm.
Like you gotta understand your risk to reward and understand that compounding is the way to build it. If you could just grow your account by 10% each day, at the end of the month, you'll be a lot happier than if
Hmm.
you tried to over leverage your way into some money.
Exactly, exactly. Don't go for the home run. You know.
Right.
Um, and also another thing too with the risk management is that you got to know how many trades you're willing to take a day.
Yeah.
You got to have that on your plan. You got to say, hey, I'm not taking no more than 3 trades. I'm not taking no more than 2 trades. I'm not taking more than one trade. Doesn't matter. Have come up with that number that you're comfortable with, and go with it. Right. And don't try to overdo it. Sometimes when it comes to this trading thing, less is more. Right. You gotta have, if you have less trades that are more accurate, that are like, that you pay more attention to,
Mm-hmm.
then you're better off than to trade
Mm-hmm.
20 million times and then lose half of that. It just don't make no sense, right? So have a plan, write it down, follow it, follow
And
it.
it took a long time for me to get that too.
Yeah,
Um, and
yeah.
I was hearing it from the beginning. Everybody was saying it when I first started. Like the person who trades the least amount is usually the more profitable trader. But I
Absolutely.
was taking 40, 50 trades a day.
Hmm. Oh
It
yeah,
was bad. I had no idea what I was doing.
yeah.
But really, if you could be patient and what's the D word I'm looking for? I'm having a brain slip right
The D
now.
word. I could think of it.
Determination.
Discipline. If you could be
Discipline.
disciplined
Yeah,
enough to
determination would work
to
too.
and determined to grow your account, if you
Yeah.
could be disciplined enough and determined enough to grow your account, that you can wait for the perfect setup, that
Hmm.
you can go Monday and Tuesday and not take a single trade because you're waiting for a perfect setup, you will be more profitable than if you just go out here and just, oh, this looks like it's swinging this way, it look like it's swinging.
Yeah.
Patience and having them good setups, and then if you wait for that good setup, that's when I'm saying you can really over leverage. I don't want to tell you that, but you can over leverage. That's what I do.
Yeah.
I'm sorry, I'm
I
giving
feel
back.
I feel like I feel like everybody need to blow at least a couple of accounts, you know.
It's healthy.
It really is, man. It doesn't feel good when you do it, but hindsight is, when you look back at it, you're like, okay, you know, I know what I need to do next
Yeah.
in order for me not to do that. So, not saying go ahead and intentionally blow your account out. I'm not telling you to do that, but I'm just saying it might not be a bad thing if you blow an account out. It's not gonna feel good, but it's gonna be better for you in the long run.
Yeah.
Obviously, if you learn from it, but if you don't learn from it, then I don't know what to tell you. All right. Um, but yeah, so that's all the points that we wanted to cover as far as the trading plan goes. I do have a template for a trading plan that I wanted to just share with y'all, um, and I'll drop it in the chat if you want to go ahead and use it. I did use it, when I first started, but I don't use it anymore. I use a different one. It's pretty generic. So let me go ahead and share my screen real quick. Let me guys know if you can see my screen. All right. Can y'all see my screen?
Yeah, it's coming. There you
Uh,
go.
all right, cool. So basically, it's pretty straightforward. This is just instructions. The first page is basically telling you, like, once I send it out, just make sure that you make a copy. That way you can make changes to it. Um, Trading Constitution. So this is basically just kind of like affirmations. You go ahead and read over them. Just some things that that you can basically go back and read just to kind of give you a reminder, right? Um, and then this is the trading plan, ideal setup, confirmations. What you need as far as confirmation goes, as far as setup goes, your trading style, what time frame, and if you're a swing trader, intraday trader, scalper, it doesn't matter. So just choose whatever works for you, right? And this section is for a trade journal. Each trade that you take, you can put, the date, the pair, if it was a buy or sell, lot size, your risk, and so on and so forth. And this is the risk management. Basically, you could just use it to kind of know what you need to be risking on each trade. Um, and then the market biofeedback. So each trade that you take, you can basically go ahead and put your feedback in there. To kind of know what you need to be working on. Right. So I'm gonna go ahead and put it in the chat. If any of you guys want to go ahead and use it, right? And you want to tell them what the homework is?
What's your trading plans? Let me see your trading plan.
Yeah, let's see him. Let's see him. I want to see a trading. I'm gonna post my trading plan too. I'm not gonna just tell y'all to do that, and I'm not gonna do it. I'm gonna put my trading plan in the chat, and I want
I'm
to
gonna
see
post
everybody trading
mine.
plan.
I'm not home right now, but when I get home, I'm gonna post mine too.
Yeah, I got to make some adjustments on mine before I do that. The risk management part. I got to change that first before
Yeah.
I. you know, but yeah. So that's basically all we wanted to cover today. We wanted to make it, sweet, short, sweet, and simple. So, anybody got any questions before we end this call?
Where Jazz at? I know she's gonna give a good word. Give us Leave
With
us on a
Jazz.
good note.
I'm here, but honestly, y'all, I don't really have much to say besides be mindful because this is a holiday week, or well, actually mindful for literally the end of 2020,
Yeah.
because of the holidays. Um, if you have not, I would advise that everybody go through the back office. Um, and this is for myself as well because I'm going to go through the back office and go through those videos and go back to the basics. The basics never go anywhere. Doesn't matter how good we get into trading, you're still going to have the basics, and that's what's going to make that will make or break you. So if your foundation is rocky and you necessarily money hungry, you need to reevaluate. Because I don't want to hear about people blowing their accounts, and I ask you, well, why did you blow your account? You tell me that you over leveraging or because of greed. Because we're telling you now, as people that have been in this trading game for a long time, and we might have some newbies on the call, greed is going to blow your account. It can make or break you. Sometimes you can have good luck, but ultimately stay away from it. And stick to the trading plan. We have some challenges or stuff that's going to come up just to motivate and push everybody, and we're all going to do it. I should be posting those maybe in the next 2 weeks or so. But I really don't have a lot to say though, honestly. Go back to the drawing board, understand what you're doing wrong, acknowledge what you're doing wrong. If you need help, reach out to us because we don't know unless you ask, right?
Closed mouth don't get
Um,
fed.
right. Um, and we're going to go into 2021 with the bank, right? Because everybody's going to be 6 and 7 figure traders.
Oh God.
Let's go.
Oh God.
And if you want to retire from your job, you will have that opportunity by being a part of this family. We got some things that we're going to be changing that's going to help everybody. We have a lot of things in the making that's going to help everybody make more money. So just thug it out with us. Stay positive. Like I said, if you have questions, reach out to us. We don't bite. I'm just saying.
Right.
Oh, speak for
um,
yourself.
okay, well, I don't bite, but I'm very direct. So don't come in my inbox with nonsense because I'm gonna ask questions. Um, and the ultimate question everybody needs to answer for themselves is how bad do you want it? That's all I have to say.
Good.
All right.
Good.
Cool. Anybody else want to add anything to this? Did y'all get any value today? By the way, let me see a one in the chat if y'all got any value today. There you go. Only one person, two people. Okay. All right.
All right.
Um,
Well, we touched a life, bro. We helped somebody out.
we help somebody out. All right, there you go. That's what we're going for. Perfect. All right, cool. So again, thanks for hopping on with us and giving us a few of your minutes or whatnot. And we'll do this again next week. All right. I love y'all and y'all have a good one.
Y'all stay blessed. I love you.
All right.